people can read what's on the agenda for today, because there's a lot there. And a couple of specialist topics which aren't covered in detail because, like I said, they're specialist topics and it would take a long time and our brains would just explode. Starting point is probably to go to 126A and particularly 126(5) and 15, because they're the provisions that provide CGT rollover relief in the event of marital breakdown and the transfer of assets. But this is the big but. Don't be logical and sensible and mature and rational and transfer assets between you and your spouse before you get an order of the court, because without an order of the court, there is no rollover relief. Now, before we get to that example, capital gains are disregarded if the first element of the cost is $10,000 or less. So remember that example, but capital losses are disregarded. So if you go to the top of the slide, you'll see that capital gains and losses are disregarded if you're below the threshold. Joyce's partner was named as the test individual, but Joyce is going to take control of the trust, and Joyce would rather be the test individual for family trust election purposes. Now, here's the good news. Even though the revocation and variation rules are a nightmare to read, the really good thing is you can revoke or vary these nominations in the event of divorce as many times as you like. Depreciable assets. If you get a 126A roll, you might get a Div 40 roll, but just check, because, at the moment, however, all these different capital allowance rules, some are in the 97 Act, some are in Transitional Provisions Act. Please check whether that automatic rollover does apply to you.